All right, let's get right into it. We're going to build a system that puts your investment exits on autopilot. The whole point? To kill that voice of doubt in your head and turn every single sale you make into a lesson that makes you richer. Look, it all comes down to this simple formula. It's a three-part system. You need predefined targets to take your profits, you need hard stops to protect your money, and you have to do a quick review, a post-mortem, to get smarter every single time. This is the entire playbook.
Come on, you know this feeling, right? That stock you just sold suddenly doubles a month later, and you're just sitting there, kicking yourself, playing that decision over and over in your head.
Or maybe it's the other way around. That small loss you were so sure would turn around just keeps getting bigger and bigger and bigger. Just remember, hope is not an investment strategy.
Yep, that's the one. It's like a punch to the gut, isn't it? A mix of regret and pure frustration that just poisons your next decision. We are going to get rid of that feeling for good.
Believe it or not, there's actually a name for this problem. It's a well-documented, totally predictable pattern that hits almost every single investor. And understanding it, that's the first step to beating it.
See, this isn't just you. It's not just a feeling. It is a proven scientific bias. Academics have been studying this for decades, and they all come to the same conclusion. Our emotions make us absolutely terrible at selling stocks.
And here's the name of that psychological trap: the disposition effect. Basically, we hate admitting we're wrong, so we cling to our losers. At the same time, we're terrified of our small profits disappearing, so we sell our winners way too early. It's the exact opposite of what you're supposed to do. So how in the world do we fix this? How do we fight our own brain? Simple. We take a page from airline pilots. We're going to take emotion completely out of the cockpit by pre-committing to a checklist long before there's any turbulence.
Okay, enough theory. Let's get practical. We are going to build a tool right now, an exit map, that you will follow without thinking about it.
Okay, first things first, not all your stocks are created equal. You have to split your portfolio into two distinct buckets. On one side, you have your baseline holdings. These are the core, long-term positions you pretty much leave alone. On the other side, your tilt holdings. These are your active bets, and every single one of them needs a map.
And for every single one of those tilt positions, you have to define these 4 things before you even hit the buy button. Why are you buying it? What's your plan to sell for a profit? What's your emergency exit? And is your timing right?
Now, here's where the discipline really kicks in. Target number 1, the stock goes up 20%. What do? You sell 1/3 of your position, period. No debating, no second guessing, you just execute the plan and lock in that win.
Then what? Well, the stock keeps running. Now it hits a 40% gain. Awesome. So what does the map say? It says sell another 1/3. You've now banked a serious profit and you're playing with the house's money.
So what about that final third? This is your moonshot. This is the piece you let run, but you protect it with the trailing stop loss. This is how you capture those massive portfolio-changing winners without risking the profits you already took.
Having a map is a great start, but a map you have to stare at every 5 minutes? That's useless. The real power move is making the plan execute itself.
Let's be honest with ourselves. Buying is the fun part. It's exciting, full of hope and potential. Selling? Selling is work. It's a chore filled with anxiety. A good system makes selling boring. It makes it mechanical. And you know what? In investing, boring is what makes you rich.
So you basically have 2 main ways to automate this. Path A is the gold standard, an OCO order. That stands for one cancels the other. You set your profit target and your stop loss at the exact same time. It's set it and forget it. If your broker doesn't have that, then simple price alerts on your phone are the next best thing. Your phone buzzes, you log in, you execute. No emotion.
All right, we're at the final piece of the puzzle. This is what separates the amateurs from the pros. Every single exit, whether it's a win or a loss, is data. And if you don't analyze it, you are literally throwing away the most expensive education in the world.
And your exit log doesn't need to be some complex spreadsheet. Seriously, it's just 5 simple things. What was it? When was it? Did you follow your map? How were you feeling? And what's one little thing you might tweak for next time? This takes 10 minutes, tops. The value is insane.
This right here, this is your new most important number. Forget your portfolio's return for a second. The metric that really matters is your discipline rate. Are you following your own rules at least 90% of the time? If you're not, the system isn't the problem, it's the execution.
Okay, that was the what and the why. Now it's time for the how.
I don't want you to just watch this. I want you to do this. So here is your mission.
4 simple steps you can do right after this is over. Open your portfolio, split your holdings, pick just one of those active tilt stocks, and write out its 4-line map. Then, and this is key, actually go to your broker and set the orders or the alerts. Finally, create that simple exit log. You can do all of this in the next 20 minutes.
So let me leave you with a question to think about. For your own strategy, right now, what feels more urgent? Is it protecting your downside by tightening up your stops? Or is it giving your winners more room to run by widening your targets? Drop a comment below and let me know.
Hey, if this helped you clarify your thinking even a little bit, hit that like button. Make sure you subscribe for more ways to become a smarter investor. Now, get to it. Go build your map.